First session. First session is what? So banking and finance. Uh, this is the module. Today we will cover the first chapter, that is financial service institutions and their functions. So in this session we will discuss about classification of financial service institutions, characteristics of financial services, role of financial services, financial service institution in Sri Lanka, and Central Bank of Sri Lanka and its function, and financial institutional laws. So these are the areas we have to discuss. The financial service institutions, normally people think financial institution means only banks. Some people, if they have knowledge on insurance, okay, we can include insurance company as well. More than that, leasing companies. Right? So these are the only companies or institutions we consider as financial institutions. But actually, in practice, there are many financial service institutions. So why do we call this kind of institution as financial institution? Do you have any idea? So I can give you one clue. Manufacturing companies, trading companies, export-import companies, other service companies. How the banks and the insurance companies are differ from this kind of companies, organizations? Do you have any idea? Do you have any idea? For example, how does banks differs from manufacturing organizations? How? How? Anyone else? Those kind of companies, right, manufacturing or trading companies, they are exchanging goods or the services, right? Goods. But here, these financial institutions, bank and insurance companies, even though we call them as services, actually their product is what? The product is money. Right? They cannot sell money, rather they can mobilize, right? They make movements of money. They facilitate movement of money. Right? The movement of money from where to where? Right? Movement. So in the system, right, in the financial system, always there are two parties. One party, they have excess money. They have excess money, and other hand, they need money. They are facing deficit, shortage of money. Right? So the people who having excess money, they are searching for any opportunities or any safe places that give the decent income, like interest income or other type of income. So they have excess money. And other hand, the deficit entity, right? Deficit entity, they want money for their business or for their personal use or for their housing, or to purchase house, to purchase land, to have an enjoyment, the fun, right? For different purposes they may need fund, they need money. The financial institutions play a role between them. The banks or other financial service institutions, they play role as a middleman. So what actually do is they collect money from those who have excess money, right, and take that money and they pay small amount of interest, say 5%, 6%, like that. uh, the pool, right, pool of fund, pool of money, right, pool of money. The deficit, right, deficit entities approach the bank and they get loan. So the banks and other financial institutions, they play the role of called middleman, right. These financial institutions, they are the major role is financial intermediaries. Financial intermediaries. So they do business with public money. Public money mean actually they don't have capital. Capital mean, so the amount of money they use to give loan to its customers entirely, that money is entirely belongs to the depositors. So this is how financial service organizations differs from manufacturing or other conventional companies. Say manufacturing companies, they purchase raw material and process and make them as an output, and they make sales. So this is one type. Trading companies, they purchase something and they resell to someone else. So this is trading, buy and sell. And sales organization, like sales organizations, for example, counseling, right, counseling service or medical service. So this kind of sales institutions are different from the banks. The banks not provide service actually. So banks are providing a service called what's that? A financial service. It's a financial service mean middleman, a broker, a professional broker, a licensed broker. Financial service institutions are licensed, legitimate brokers, finance brokers. And the legal system gives a different name. For some organizations, they call such organization as bank, insurance companies, leasing companies, right? So they give a different names, but actually what they do is broker, middleman, right? So this is financial organization. A financial service institution is an entity that engaged in the business of dealing with financial and monetary transactions such as deposits, loan, insurance, credit card, investment, currency exchange, and money management, as well as providing information on stock market, right? And these services you may know, you may very familiar about this. These financial service institutions, they are engaged in a business of dealing financial and monetary transactions. So the very important point is the transaction. They are dealing on the transaction. They are not engaged in production, or they are not engaging in providing services. No, they are dealing with the transaction. That transactions may be deposit of money, lending loan, providing insurance, issuing credit cards, making investments, facilitate currency exchange and money management, as well as providing information on the stock market. So this service is not provided by the banks or insurance companies. A specific organization called stockbrokers, right? And other issues like wealth management, safety locker system, trustee services, right? Issuing letter of credit, export financing. So there are institutions. So these are the financial services. When you look at these services, all such services are transactions. So those are the product. Those transactions are their product. Financial institutions are generally regulated by financial laws of the government and authorities. Normally, this kind of financial institutions are regulated, and especially the key player in regulating financial services in Sri Lanka organizations. What is that? Which organization regulate financial institution in Sri Lanka? What is that?
Central Bank.
Yes, Central Bank of Sri Lanka. Said Apex is a Sri Lanka CBSL is an agent of the government and bank of the government, a banker of the bank, bank of the bank. Not only that, right? So, for example, stockbrokers also providing financial services. So, which institutions provide regulation? Which organizations monitor the stockbrokers? Which organization? Is it Central Bank? Who control or monitor or regulate stockbrokers? Or the
Stock exchange. CSE.
not CSE.
CSE.
Not CSE. CSE is a private company. CSE is not a regulating body. It is not an authority. It's a market. Colombo Stock Exchange is a market. So what if not? So what is that?
Central Bank of Sri Lanka.
Which one?
Central Bank.
No. Central Bank controls the banking, right? Banks. Stockbrokers and capital market or stock market is regulated by Securities and Exchange Commission of Sri Lanka. Securities and Exchange Commission of Sri Lanka. Right. Insurance companies. Insurance companies. Who regulate insurance companies? Who regulate? Central Bank of Sri Lanka or Securities and Exchange Commission of Sri Lanka? No, none of these two. What is that?
Sri Lanka Insurance Corporation.
Sri Lanka Insurance Corporation is one of the insurance company. Sri Lanka Insurance is one of the insurance companies. Right? Insurance Board of Sri Lanka. Insurance Board of Sri Lanka that regulate insurance companies in Sri Lanka, insurance business in Sri Lanka. Leasing companies, which organization? Leasing company, Central Bank, right? Central Bank. Financial service institutions encompasses broad range of financial operation within the financial service sector, including bank, you know what is bank, trust companies, right? Trust companies mean, right? There are some institutions, they manage fund, they invest in real different type of businesses like real estate, apartment, housing development, right? Export, import, right? They collect money from the public and they do business. It's called trust fund, and they make profit and they distribute that money to the trust holders. Insurance companies, brokerage firms, investment dealers. So there are many types of finance services organizations here. Right. Theoretically, we can divide. So there are different types of classification of financial service institutions. There are many bases to classify the financial service organizations. Mainly, so one of the categorization is banking financial institutions, non-banking financial institutions. It's two, right? It's mean one side, the one bank and non-bank. What do you mean by bank? What do you mean by bank? What is the unique feature of bank? There are a lot of financial service institutions, but we call them a bank, commercial bank. It has unique feature. What is that? What is that?
Except deposit from public.
No. No. Special. What is that? Special. Special thing is, right? Special thing is commercial banks accept demand deposit. Demand deposit mean what? Checking accounts, right? So those are the commercial banks. The banks, normally we call banks, its main business is accept deposit from the public, from general public, and make loan to its customers. Make loans, accept deposits, and make loan. So banking financial institutions include commercial banks, whose primary role is accept deposits and make loans. Non-financial institutions include investment bank, right? Look at here, investment bank, but we categorize them as non-banking. Normally, investment banks do not involve in accepting deposits from the public, right? Investment banks are not allowed to accept deposit from the public. Insurance companies, they are not accepting any deposits. They are collecting premiums. Finance companies, Lanka Rex Leasing, Janasakti, general insurance. So there are a lot of finance firms. Leasing companies, People's Leasing, Commercial Leasing, HNB Leasing. There are different. So these companies, organizations, we categorize them as non-banking financial institutions. Right? So it's repeated. So it's a financial intermediaries. Right? It's a middleman. The banks always function as a middleman between depositors and the lenders. Right? So it's in detail, so you can read it. So the main function is what? Accept deposit from the people who have excess money and use that money to make loan. So that loan may be used for to make business, or to purchase something, or to for financing for housing, apartment, or education somewhere. So what are the things, right? A bank makes money that they receive from deposits, sometimes in assets and financial security, right? Mostly loan. So how do banks make profit? How do banks make profit? How do banks make profit? It's simple, right? It's simple. Everyone knows. What is how?
Interest.
Interest means, say for example, for its customers, depositors, they pay only 5% interest, right? And they lend that money for about 15%. So 10% margin. 10% margin for the bank. 10%. Right? The banks also accept payment agency by offering. So main business of the bank, or the main way of making profit of the bank, is converting deposit into loan. The main asset of the bank is loan to its customers, followed by financial securities. Some banks invest their money in securities like stocks, bond, right? Because of the liquidity. Sometimes banks may need money immediately. If a bank use all of its money to its customer as a loan, it is very hard to collect money immediately from them whenever they want immediately. So therefore, the banks allocate a certain amount of money to make investment in the stocks. Whenever they want money, whenever they suffer out of cash, they can sell their securities at the market price in the Colombo Stock Exchange. Right? So these are the ways of mostly banks make money using providing loan and making investment in stocks. And also banks makes money by offering some charges, so by offering some services. For example, agent offering host payment services in debit card. The bank earn money using debit card. Every year you have to pay 500. For every transaction they may charge 5 rupees or 30 rupees. Credit card annual fees, right, and interest on credit cards. Check facility, right, whenever you keep a current account you have to pay maintenance fees and stamp fees and what else, the checking fees and check return fees, penalties, lot of things. Credit deposit facilities, and bank draft. If you want to send some money to someone else, your loved one, so they provide services for that. They will charge. The primary purpose of depositing fund in the banks are convenient. Why do people invest money in the bank? Convenience, interest income, to get interest. A bank's ability to lend out fund is determined by the amount of excess reserves and the ratio of cash reserve held by the banks. You know that some companies, some banks able to provide billion of money as a loan to its customers, but some other banks unable to make a big amount of loan. Why is that? So what determines the ability of the bank of making loan? Commercial bank, HNB, People's Bank, they can, right? So this kind of banks have ability to give a big amount of loan, millions. But when you look at Samurdhi Bank, Sanasi Development Bank, or Rural Development Bank, or Cooperative Bank, so those kind of small banks are unable to provide or make a big amount of loan to its customer. What is the reason? So what determines a bank to ability of providing loan? What is that? It's cash reserve, right? Excess cash. Rural banks, Samurdhi Bank, and cooperative banks, they have a limited scope. They are functioning in a limited area. But commercial bank and HNB, those are the national banks. So they have a big amount of customers. Therefore, they have a big amount of money. So why do banks establish branches across the island? Why? To attract its customers, to attract depositors. So that's why they promote their deposits. Can you tell me from what type of deposits bank make a big profit? What type of deposits? Current account
FD.
or a saving account or fixed deposits or children account? Which one? Banks get more profit. Right, rather than putting message on chat box, please make it interactive session. Unmute your mic and tell the answer. Fixed account, fixed deposit. More than that, fixed deposit you may deposit for 2 years, 6 months, 3 years or 5 years. But if people deposit in child account, Sisudane or like that account, so they make huge profit, long-term profit. Say that's why, in a school, right, in a school first day, the banks, most of the banks promote depositing, right, opening account. Banks approach the school, they encourage their parents. How they encourage? If you deposit 1,000, we will deposit 1,000, 1 to 1, right? Then many parents attracted on that, they open an account on their child. Every month they deposit money, right? Regularly, most of the parents deposit money, but this amount of money can be withdrawable at end of their 18th year. So 18 years. So banks can use maximum as possible. They utilize 99% of this kind of deposit can be used to make a long-term loan. Normally long-term loan having high interest. Right? So fixed deposit, more than that. The children account gives more profit to the bank. But it's relatively easy for banks to raise funds as certain accounts such as demand deposits, but it's pay no interest to the account holder. No, normally the current account, it does not pay any interest. But if you get overdraft bank OD, the banks will charge interest at higher rate. At higher rate. Fire means like the fire, I think you could understand. And also the financial institutions such as insurance companies offer protection against specific losses for which an insurance premium is paid. So they are not providing interest loan, but rather they are providing a different service. They are providing some sort of protections against a certain losses. Pension and mutual funds act as a saving institution in which investors are able to invest their fund in collective investment vehicles and receive interest income. So what do you mean by pension? Do you have any idea? Pension here. What do you mean by pension? What do you mean by pension? Any idea? Do you heard about the word called pension?
The amount of money received at the time of retirement of a job or something.
Right, good. Who pays pension to its employees? Private
Government,
sector or government sector?
Employed to government sector.
Right. Employee. Right. Normally, you should know this one, right? You should know. Normally, government pays pension to its retired employees. Is it possible to get retirement, pension, right? Pension fund, pension, monthly pension, while you work, right? When those who work in private sector, is it possible?
No, in the government sector only they are giving pension, right?
Right. So this is what our people having misunderstanding because of our country practice. Normally, the pension, we don't have this kind of system in our country, but we can, right? We can, if you go abroad, right? If your age is 20 and you work somewhere, even in the government sector, no issue, right? So you expect that at the age of 60, now your age is 20, you expect at your age of 60 you want to get 50,000 every month. You want 50,000 every month. So what you can do is you can approach a bank and you tell, right? You tell or inform them you need 50,000 every month. Then bank will say, right? Bank will say you deposit, say, every month 5,000, every month 5,000 or 2,000 or 6,000, like, but whatever the amount, every month, right? Every month you have to do it continuously, right? Then end of 50 year or end of end of your age, or at the time of age 60, the bank will give you 50,000 every month, right? Normally this kind of pension, right? There are institutions like banks, pension, right? Pension fund. So the main business is this. Young employees approach this bank, this pension fund, and they, right, every month they deposit a certain amount of money. At the retirement, they get money, not from the government, not from the employer. You don't worry about government sector or private sector. No, you can work in a private company, or you can do your own business. You can do your own business and you can deposit every month. Then after up to say 60 years or 50 years, then you can get pension. So this is a proposal submitted by the previous government, but our Sri Lankan employees oppose. They protest against that decision. Why is that? They don't have any knowledge of this practice. Actually, our government, Sri Lankan government, pay pension to its retired employees from the public fund, from the treasury, but they allocate money from the budget. So one side payment, no benefit to the country. So if government propose this kind of system, pension fund, that is independent from the government, it's a huge relief to the government. And mutual fund, that is different. Mutual fund, do you know what do you mean by mutual fund? Mutual fund, have you heard about this term, mutual fund? Have you heard about this term? Anyone? Right. There are two, A and B. Right? Mr. A and B. A make investment on stock market, right? Make investment on stock market. They invest 5 million. So in the last 6 months of investment, he may earn 1 million profit. B also invest in stock market, in different stocks, he also invests in 5 million, but he may end up with loss of say 50,000. He may lost 50,000, right? Here one investor get profit, one person get loss. It may repeat or other way around. The next 6 months, B may got profit, say 2 million profit, and A end up with loss of 1 million or 2 million. So it's a risky business. So if they have agreement, right? When I make investment on stock market, if I make profit and if you make loss, I will compensate your loss, right? I will compensate your loss. And also, when I make loss, when I A make loss, B should distribute some of their profit to A. Is it good deal? Is it good deal or bad deal? What do you think? Is it safe or risky? What's your opinion? Make investment individually or make investment collectively by using some sort of agreement. So which is safe? Rather than looking at the profit, which is safe side? Make investment individually or make investment collectively? Which is safe?
Making investment collectively.
Yes. Make investment collectively. You may not end up with profit. You may not end up with huge profit, but you may end up with not big loss. Not a big loss. We can, right? There are some safe sides. So for that, it is very hard to find individual to come agree to this agreement. It's very hard. That's why mutual fund companies like, do you know Dialogue Genie? Dialogue company, Dialogue, they have their mobile app, Dialogue Genie. Do you know that? Do you have installed Dialogue app in your mobile phone? Most of you apply, right? Most of you have. So there's an app called Genie, right? Genie. So what they do is they collect money from their customers and make pool, right? A big amount of money from different customers, and they invest that money in stock markets and other businesses and distribute their profit among their customers. Sometimes it make huge profit, sometimes huge loss. So rather than make investment individually, we can make investment in collective manner. But mutual funds and organizations, they may have expert in making investment in stock markets. It's a safe. So that also is a financial organization, right? So I have explained you what is pension fund and mutual fund. Market makers or financial institutions that act as a broker, as I already emphasized you, financial institutions, right? So they are brokers. Always there are brokers. So what's the main duty of the broker? They facilitate the transaction. Right? If there is no bank, you cannot find a safe deposit place. So the bank shows to the public the bank is the safest place. You can give your money, deposit here. We safe, we provide safe, and also we provide interest for your money. You don't give money, you don't give any charges for us. We will give you interest, and for that, therefore, many people got attracted and invest. It actually they are put their money in one basket. So the small amount of money become a bulk, a big amount of money, so that they have a big capital. And there are people, they want money, then they approach the bank and they get loan. Actually, they are facilitate transaction. The broker mean what? Broker, the main duty of the broker is facilitating transaction, facilitating any transaction. They may have different names. So dealer facilitate the transaction in financial assets such as derivatives, currencies and equity. Derivatives I will explain you by the next chapter, right? So you may exchange currencies, you may exchange equity. So here in exchange equities, stock brokers may involve on this. Currencies, now foreign exchange, forex currencies and derivatives I will explain you. Other financial service providers such as leasing companies facilitate the purchase of equipment. Real estate financing companies make capital available for real estate. You know the function of leasing companies. If you do not have sufficient amount of money to buy something, for example vehicle, motor car, what you do is you can approach a leasing company. Leasing company will purchase that car and will give you that car based on some monthly installment. So it facilitates on behalf of you. The leasing company paid that money to the car selling company. So they facilitate the transaction. The broker. Real estate. If you want to buy an apartment unit, you have no money, you can approach a bank, then they will finance you. So they have capital. And also financial advisors. Financial advice. It will give you financial advice as well. Right? Finance advice. Do you think banks is there an institute that give financial advice? Stock brokers, and there are investment companies, merchant banks. So this kind of financial institutions, the main business is providing financial services. Do you know the Blackstone, JB Morgan? Do you know that Blackstone, JB Morgan? Do you know JB Morgan? JB Morgan. So these are the companies, actually they are not a bank, so they are wealth management companies. They have a big amount of capital. Blackstone is a company, world largest wealth management company. Wealth management. It's not a bank, not insurance company, it's a wealth management. Wealth management company means the people, right? People allocate, right? Give their financial assets, money, like that, to that companies. So they have big amount of money. Rather than they lend money, they invest in a big business ventures like Titanic, right? And big businesses. So in London city there are a lot of apartments they have. So it's a wealth management. They help the customers to maximize their wealth. So that is the financial companies. Sometimes private companies want to list their companies in the stock market. Private company is going to list their company in the stock market. It's not a simple process. Right? It should pass several steps. There are a lot of legal procedures. There are a lot of documentation. So a particular company may not have such kind of expertise. So what they do is they may approach investment bank. So they are experts in preparing prospectus and market its shares. And so they may approach. Or sometimes some companies making struggle. They are struggling on making profit. Survival is a very challenge for them. For that situations, such risky banks, risky organizations approach financial advising companies. There are professional advisors. Then they will support them, advise them, and they charge for that. Right? Non-banking financial companies have played a crucial role in enhancing competition in the financial ecosystem and diversification. So you can read it, right? Non-bank finance companies, so big difference. As I told you earlier, non-bank finance companies doing functions similar to other banks. However, there are a few differences. Non-bank finance companies cannot accept demand deposits. Non-bank finance companies are not a part of payment and settlement system, and such as cannot issue a check to its customer. You may know that what is a payment and settlement system. So I can pose a question. You have a check, HNB check. You have HNB check. Can you deposit this HNB check in commercial bank? Does commercial bank accept the HNB check? Can you deposit
Yes.
it? Right. You can deposit, isn't it? You can deposit. Am I right?
Yes. Yes.
Then, how does commercial banks know he has sufficient money in his account in HNB? How?
They check with commercial bank next day.
Right. Why they take 1 day? Why do you need one day delay? Why? 1 or 2 days you need. Why is that? There are many instances. HNB check may deposit to commercial bank check may deposit to People's Bank to other bank, right? So there are a lot of complex transactions in a day. Then how do banks knows? Who settle this one? Central bank, right? All checks will be forwarded to central bank. That's a unit called payment and settlement system they have. It will clear. So in that system, only commercial banks can access. Right? The central bank gives license only for commercial banks. So therefore they are able to deal with checks. Other investment companies, right, merchant banks do not have access on that system, payment and settlement system. Therefore, they cannot deal with checks. Right, and the second type of classification is based on fund-based activities and non-fund-based activities. Fund-based activities mean, so they are right. So they are mainly, the business is mainly fund-based, money-based. They're using money. The second type of institutions, financial institutions, they are not dealing with money, rather, the basic things like the fund-based activity. So purely, this kind of organization purely earn money by involving in financial transactions, accept, deposit, and make loans, right? And make investment on one company. give loan, right? Giving loan. So those kind of things called fund-based activities. Non-fund based activities like, do you know safety locker services? Do you know safety locker delivered by the bank? Do you know safety locker?
Yes, sir.
Yes, safety locker. You know that. So it is not. Is it bad finance the fund based activity or is just a service for you? It's a service. For that service, you pay you pay small money, right? So that is non-fund based activities. Like that, advice, right? Financing advice. This is non-fund based activities. So there are organizations, even though we call them as a financial service institutions, but they are not deal in fund transaction. They are not function as a middleman. They are not a broker, right? I will list out. So these are fund based activities, right? These are fund based activities. Can you look at this, right? By looking at this, if you don't know anything, let me know. I will explain the thing. If you don't know anything of this, any of the service, so these are the fund based activities. Right, now let's move to non-fund based activities. So it may new for you. So leasing and credit card, debit card, loan, deposit, checking accounts, those are fund based activities. Investment on companies, investment on shares, those are fund based activities. Now we look at non-fund based activities. These activities, these services are basically advisory or ancillary services for which a bank charges a fee or commission for rendering that service. They do not involve outlay of fund. So mainly, right, they do not involve in outlay of fund. So the money will not come from the institutions. Only incoming, no outgoing. Right? Money only incoming, no outgoing. It means this kind of institutions will give you a service, advisory or whatever the services, but it will not give you money. Not in the form of loan or not in the form other form like investment. No. Right? It gives only services or other charges like safety locker system or advisory services or underwriting services like that. Non-fund fund credit facilities involve only issuing banks' commitment to honor certain promises as per the letter of credit. Right, letter of credit. When you do import-export business, you need letter of credit or guarantee or similar document favoring to the third party. However, outlay of fund may take place in the event of development of commitment to the issuing bank. So non-fund based activities can be like this: merchant banking, managing capital issues. Companies sometimes they may have problem in managing their capital, so they may have a big amount of debt. They may need advice how to manage this kind of big debt, like our government face debt, public debt. IMF advise them, but IMF they involving both fund based and non-fund based activity. Project advisory services, custodian, credit card, merger and acquisition, credit rating, right, like the Fitch rating, S&P rating, right, bill collections, capital restructure, trusteeship, structuring collaboration and joint ventures, hedging of risk. So this kind of services are non-fund based activities. Classification of financial services on the basis of the service offering by the group of people. You know, the retail banking and wholesale banking. Retail banking mainly the services to the individual and small organizations. Wholesale banking, it means the company, the bank provides services only to the large corporations. They are not publicly promote their business. Their customers are companies, large corporations and government. Retail, so when you go to the website, for example, People's Bank website, so there are two sections. One is corporate banking and retail service. Retail banking means, so normally we use the services, so those are retail banking. And other side, corporate banking, they provide service only the corporations and government. The volume of the money, a deposit or loan, a big amount, a big amount of money, millions and billions. So you can read this, you can understand the slides. So this lending, this investment advisors, mutual fund, I have explained, mutual fund. This is there are a lot of investors. The fund manager collect all of their money and they invest in securities and they will generate return. This return will be distributed to the investors based on the proportion of the investment. This is called mutual fund. And insurance, the bank and insurance companies, they join together and they provide a new service called bank assurance. You may observe in some banks, there's a small space for the insurance companies. When the banks promote their product, they promote some insurance products as well. For example, the banks, if you deposit your money in certain banks, they will give you some sort of insurance, free medical insurance, like that. And also insurance companies, they have some sort of collaboration with banks to collect its monthly premium, and also banks may work behalf of the insurance company. Sometimes bank employees promote their insurance company products, insurance company policies. For that they will get commission as well. So the bank having a big customer base, so they know the financial capacity of each its customers. Based on that history, so when insurance companies approaches the client may deny, no, I have no interest on that insurance. They have some sort of perception. But when bank manager or bank employee promote insurance policies, he may ready to listen. So what is actually is that? If it is profitable, then they may agree. So bank will get commission, insurance company also customers, insurance policy holders. So both bank and insurance grow together. So that kind of business called bank assurance. And so explanation of that bank assurance here. Wholesale banking I have explained to you. So factoring, Factoring. Do you know that factoring? Factoring means this. Normally, so there's an agreement between seller and buyer, or buyer and seller. So it means normally seller, once they made sales, they may collect. They have take time to collect the money. Say 3 months. They have to wait. The seller has to wait for 3 months. And also, it's difficult to collect money from the buyers. Case collection is hard sometimes. For that, and also the seller need money immediately, even though they make sales for 3 month term, in 3 month term, but the seller need money immediately. So what they do is first they sell their product to the buyer, right? And the seller inform to the bank. So this is coming under corporate bank, right? It is not individuals, not retail. Coming under corporate bank, right? So the seller approach the bank, and they send invoices, say 1 million invoice, 1 million sales invoice. So they send copy to the bank. The bank will give 80 to 75 to 80%. Say they may give 80%. So 80,000. So 800,000, right? They may pay 800,000, right? So immediately the seller will get 800,000, for example. Then, right, you see, for end of 3 months, rather than paying to its seller, right, they are not paid to seller. Rather, the bank will approach the buyer and they collect this 1 million in 3 months, right? Then the fifth, so they make balance payment. How much balance payment? Say 200,000, right? And here 6, make remaining payment, make payment of factoring, so that the seller will give commission to the bank. So this is called factoring, right? This practice is called factoring. Second one, they may have factoring here. Forfeiting, it is a different second type. So what does it mean is, so when you look at the factoring, right, here only one bank involved here, only one bank, right? Only one bank. That one bank deal with seller and buyer, right? Only one bank. Normally it's local, right? Local business, not international business. Rather, when you look at this forfeiting, it means, right, you see, rather than buyer and seller, importer and exporter. Importer may be in UK, exporter may be in USA, right? USA, right? First they make an agreement, buyer and seller make an agreement to export or import, or the transaction of 10 million US dollar business deal. But exporter may not have control over importer. Sometimes after export to the importer may fails to pay money, they fails to honor the commitment to the exporter. Then exporter may face a huge loss. For that the exporter have a deal on a bank. So this bank in USA, this is exporter bank. And also before export, the exporter will request a letter of credit. This means letter of credit normally is issued by importer's bank. The importer approach Letter of credit. Letter of credit is simply an endorsement. It's an endorsement of guarantee on the amount, right? So when they make a deal, so the importer will approach importer bank and exporter will approach exporter bank, right? After that, right? So he may number 2, number 3. So they may have an agreement. After the agreement, the exporter will export the product to the importer, right? Then this exporter will send his invoices, right? Invoices, and the exporter bank, right, will give some payment to the exporter, right? Once they deliver the item, they submit the document to the discounting bank. Right? Say if the business is for 10 million US dollar, this discounting bank will not give money 10 million, right? So it may 6 months it may take. So at first instance they may give 80% of that, say 8 million to the exporter, right? Exporter. And this bank approach importer bank requesting money. Already this bank give promise, they certify, they guaranteed, so that this bank approach this bank and get their money. After receiving the money, they will pay balance, and this exporter will pay some sort of commission for that. Is it clear? Is it clear?
Yes, sir.
Okay, good. So leasing, you know what is leasing? So what do you mean by venture capital financing? Venture, do you know that? What do you mean by venture? Venture, what do you mean by that? Venture capital? Venture. So we have a good idea. We have a great idea. Business proposal, great business proposal. Right, business proposal. But you have no money, no investment, no capital. There are companies, it's called venture capital financing companies. You can approach them, you can submit your proposal, and you can get, right, they will undertake your business, they will fund your business, and they do everything. And right, they do business 10 years or 5 years, then after that they will get their capital and their profit, and they hand over the business to you. Now you can run the business. So that is venture capital financing. Export financing, right? They are not provide loan to do a business, rather it help exporters to export. You know, the export is not a simple thing. There are a lot of packaging issues, container handling, there are a lot of things. For that, then an exporter need money, right? Shipping charges. For that, certain finance companies may finance for that. It's called export financing. And so now classification is over. Now characteristics of financial service. So what do you mean? So you might studied earlier. What are the characteristics of financial services? Fiduciary nature, intangible, simultaneously. You know, delivery of service and accepting the service should be at the same time, simultaneously. Heterogeneity, it may different people to people, and feasibility. So those are the characteristics. So what is the role of financial services in society? So imagine a nation, a country, a society where there is no financial institution, there is no banks, right? There is no any financial institutions, right? So it promote the financial institutions necessary to promote financial and economic resilience, safeguard savings, facilitate efficient allocation, provide board access to finance. So you can read and understand. So these are very simple things. I don't want to read. So since we have limited time, only 8 hours, right? You can read and understand. So when we look at in Sri Lankan context, so we have 26 banks. So it is 2-3 years back. There are some deviations. So we have 14 local banks and 12 foreign banks. So foreign banks mean overseas bank. They have branches in our country. In addition to that, there are some specialized banks called leasing companies and saving banks, development banks, right, regional banks, like that. So these are the list of banks, the commercial banks, right? These are the local banks, domestic banks. So these are the domestic banks. These are the foreign banks, overseas banks, license, right? Or central bank has given a license to these banks to operate in our country. What do you mean by licensed specialized banks? Licensed specialized. So the central bank has not give any authority or any license to deal with check, right? Check. Apart from that services, there are some banks. So those are called licensed specialized banks. They are not commercial banks. For example, Housing Development Finance Corporation, National Saving Bank, Regional Development Bank. We have in our country, in Eastern Province, we have who are Development Bank or something like that. So the regional banks. And Sri Lanka Saving Bank, State SMIB, State Mortgage and Investment Bank, Sanasa Development Bank. So these are not commercial banks. They have no checking accounts, no demand deposits. In addition to that, there are some registered finance companies. So there are commercial banks. So there are commercial banks. So the commercial bank can be divided into domestic bank and overseas bank, right? Domestic bank and overseas bank, foreign banks. And licensed specialized bank. So there are 6 types. And registered finance companies. Actually, they are not banks. Normally, banks are controlled by Banking Act. Finance companies are regulated by Finance Companies Act. Finance companies. In our country, 2-3 years back, there are 42 finance companies. There were 42 finance companies. Advance PLC, Colombo Trust Finance PLC, commercial. So it may include mostly leasing companies. Right. Institutions are not regulated by central bank. As I told you at the beginning of this session, not all financial institutions are regulated by Central Bank of Sri Lanka. Right? The central bank focused on commercial banks, specialized licensed banks, and finance companies. So there are other financial institutions like stockbroking or dealing companies, unit trust companies, investment management companies, which come under the Securities and Exchange Commission. Insurance companies and insurance brokers, which are regulated by IBSL, Insurance Board of Sri Lanka, venture capital finance, pension provident fund, and microfinance institutions. So they may regulated by different acts. So this is your assignment. You have to answer these questions, and you have to submit your answers. In VLE. I will give you link. So you take 2 weeks time. I will give. There are more assignments. Right? You cannot use typeset. You have to write. So what people do is nowadays ChatGPT. Earlier, so at least they may search to the internet and copy and paste. But nowadays, our people easily use LLMs, large language models like ChatGPT, DeepSeek. Right? So you have to write in your own words, and you have to write handwritten. It should be handwritten. Right? You should submit by next week. I will give you the link. So central bank, it has its apex is the main body, main regulating body of a country. It has two objectives. One is maintaining economic and price stability, right? Economic stability and financial system stability. Economic and price stability mean right. So they have to control the inflation, and they have to stable the economic growth of the country. So that is one side. Financial system stability mean the financial system, the banking system, insurance company system. So the central bank should look after them. They should carefully monitor those kind of institutions. For example, what happened if someone spread a news? I visit commercial bank today for withdraw my money. The bank says, no, sorry, we have no money, please come by next week or tomorrow. What will happen if someone put a message on Instagram or Facebook with some evidences? What will happen the next day? What will happen? Everybody will be in the queue in the commercial bank or in particular bank to withdraw that money. People got panic. Then this news will spread, and other bank customer also will approach the bank to withdraw the money, and the banks may go out of money, and all banks will be collapsed. So that is called what? Finance. Then financial system may be collapsed. So it's a duty of central bank to maintain financial system stability. So there are central bank is mainly run MLA, Monetary Law Act, and central bank is an advisor to the economic affairs of the government. So they have to give advice to the government whether can we go for a loan from China or Bangladesh, or what's the interest rate. So is it possible to so regarding the economic policies, central bank should give advice. So this is vision and mission. You can read about it in Tamil and Sinhala. You can read it. What are the core functions of central bank? Monetary policy. So the central bank should decide how much amount of money should be printed. What is the inflation rate? Narrow money, M1, M2, this kind of things. Monetary policies. Money supply. Exchange rate policy. What's the rate of exchange? Flexible rate or flat rate? Management of official instrument reserve, financial international reserve. 2-3 years back, they said we are out of reserve, no foreign currency. So it's a duty of central bank to monitor management of that and oversight financial system. So they have to monitor the financial system, license and regulating supervision of bank. So the central bank provide license and provision of settlement facilities, regulation of payments. As I told you earlier, the checking accounts when they clear. So it's a duty, it's a core function of central bank. Issue and distribution of national currency. So the central bank has only rights to print money. Central bank only print money in Sri Lanka. Issue and distribution money and compilation and distribution of analysis of economic data in studies. Every year the central bank publishes their annual reports. So it has the central bank compile economic data and distribute the data. Bank to the government and its agencies and primary dealer of the government securities. So on behalf of the government, central bank will buy and sell its securities, bond, like that. Agency function, on behalf of the government, central bank should manage the public debt, government debt, foreign exchange management, fund management of custodian of the employee provident fund, EPF. So central bank is the custodian. Facilitating financial inclusion. So the central bank encourage every citizens of our country to be considered, to be included in their financial system. Everybody should have account. That's why government promote, especially the farmers, right? To get government grant, you should provide a bank account. Implicitly, they promote to get hold of people the financial services of the country, financial inclusion. That's called financial intelligence. There are some intelligence. So they like CIDs, right? They investigate what are the fraud going on. They investigate money laundering and terrorist financing. So that those are also function of the central bank. And there are financial institutional laws in our country, mainly MLA, monetary law, and act. Based on this act, central bank print money. Banking Act. So based on this act, central bank empowered to control and supervise the bank. And Business Finance Act, Finance Leasing Act, Microfinance Act, and Foreign Exchange Act, Employee Program. So these are the main laws. In addition to that, there are laws, right? There are laws. Local Treasury Bill Ordinance. So based on this law, central bank issue treasury bills and bond. Registered Stock and Securities Ordinance Act, Payment and Settlement System for check clearance, Financial Transaction and Reporting Act, Active Liability Management. So these are the acts, right, which are related to our financial service institutions. Apart from this, there are some acts like so these are the acts normally coming under the Central Bank of Sri Lanka. There are a lot of acts. There are so many acts in our country. For example, to regulate Securities Exchange Commission Act and Insurance Board of Sri Lanka, Insurance Act. So there are acts in our country. So this is not an exhaustive list. There are some acts. So this act with respect to central bank. So that's all about today's session. I will share these slides via right here. I upload the file, presentation file, and you can get it. Do you have any questions? Do you have any questions? Did you receive my file? Did you receive the file?
No, sir.
So it's uploading. It's uploading. Right, you may receive this file. And do you have any questions? We can